The rise in oil prices is weighing on some key emerging markets. Seema Modi here with what areas are getting hit the hardest. Seema.
Well, Mike, the speed at which oil prices have risen puts a number of emerging markets in a precarious situation. For countries like Japan and South Korea that import oil, every time the price jumps $10 a barrel, their daily costs rise by $25 million. That's approximately $90 billion a year. For India, the second largest importer of oil, that's about $140 billion a year. China also pays up, even though it's an importer and exporter of energy. No coincidence, stock markets of these countries are trading down on the year, whereas energy-producing nations have seen their respective stock markets rise in 2022, led by Brazil, up about 9%, Argentina, South Africa, Mexico in the green. It underscores how investors are getting more selective on where they're placing their bets, given the rise in commodity costs. Of course, Sarah and Mike, the outlook for these nations really depends on how central banks respond. Typically, emerging market central banks follow the Fed, but already, Sarah, we've seen Brazil move and, of course, Russia as well.
Right, exactly. They have to, kind of move based on their own internal dynamics. I also wonder, Seema, to what degree some of these companies on the other end are benefiting from boom in other commodities besides oil. I don't know if that's a full offset for places like Brazil, but it seems like it's more complicated than just a one-way trade.
Exactly. And I think that's why it really does come back to how these central banks respond to higher oil prices. If they tighten to defend their currency, that, of course, is one option to ensure that the oil doesn't become even more expensive. And then for the countries that do benefit, like Brazil, are they using this moment as an opportunity?
Yeah, a big rethink on the entire emerging markets trade from where we were earlier this year. Seema, thanks.